Why Robert Kiyosaki believes cash is trash. Robert Kiyosaki is a popular American businessman, investor, and author who has become famous for his views on financial literacy. He is best known for his best-selling book, Rich Dad, Poor Dad, and his subsequent series of personal finance books. One of the most controversial of his views is his opinion that cash is, in fact, trash. In this video, we will explore why Kiyosaki believes cash is trash and why this view has caused such a stir. The value of the US dollar is declining. Robert Kiyosaki, author of the best-selling book, Rich Dad, Poor Dad, has famously said, "Cash is trash." What does he mean by that? According to Kiyosaki, the value of the US dollar is declining and will continue to decline due to factors such as inflation and government policies. Inflation is the rise in prices of goods and services over time. When there is inflation, the purchasing power of a dollar decreases. This means that the same amount of cash can buy less than it could before. Kiyosaki argues that inflation will continue to decrease the value of the dollar, making cash a less attractive investment option. Additionally, Kiyosaki believes that the gap between the rich and poor is growing wider, and this trend is only going to continue. The rich have access to better investment opportunities, and as they get richer, they are able to take advantage of even more opportunities. Meanwhile, the poor have limited access to resources, and their opportunities to build wealth are shrinking. Kiyosaki sees cash as something that keeps people in a state of financial insecurity, and it only becomes less valuable over time. Finally, Kiyosaki notes that the government's policies are contributing to the decline in the value of the dollar. The government can print more money, but this does not necessarily lead to an increase in wealth. When there is too much money in circulation, each individual dollar is worth less. This can lead to economic instability and can be harmful to people who have invested in cash. Overall, Kiyosaki's belief that cash is trash stems from the idea that the value of the US dollar is declining, and this trend is only going to continue. While cash may seem like a safe and stable investment option, Kiyosaki argues that the stock market is a better choice for those who want to build wealth over time. Inflation will continue to decrease the value of the dollar. One of the main reasons why Robert Kiyosaki believes that cash is trash is because of inflation. Inflation is a general increase in prices and a decrease in the purchasing power of money. Essentially, as inflation increases, the value of the dollar decreases. Kiyosaki believes that inflation will continue to be a problem for the US dollar. This is because the government is printing more and more money, which increases the supply of money in the economy. When there is more money in circulation, the value of each dollar decreases. Additionally, as more people move towards digital transactions and cashless payments, the demand for physical dollars decreases. This can also contribute to the decline in the value of the dollar. Kiyosaki also notes that the Federal Reserve, which controls monetary policy in the United States, has historically tried to maintain a moderate level of inflation. They believe that a low level of inflation is beneficial for the economy because it encourages people to spend money and invest in the stock market. However, this can also contribute to the decline in the value of the dollar over time. In short, Kiyosaki believes that holding on to cash as a long-term investment strategy is a risky move because inflation will continue to decrease the value of the dollar. Instead, he suggests investing in assets like real estate or the stock market that have historically provided better returns over time. The rich are getting richer and the poor are getting poorer. This is a common phrase heard today, and it's not far from the truth. According to Forbes, the world's richest 1% own more than half of the world's wealth. In the United States alone, the top 1% owns 15 times more wealth than the bottom 50%. So what does this have to do with cash being trash? Well, it's simple. The rich invest their money into assets that will continue to grow in value, such as stocks, real estate, and businesses. Meanwhile, the poor often live paycheck to paycheck and are unable to invest their money into anything that will generate passive income. This creates a vicious cycle where the rich continue to get richer while the poor struggle to make ends meet. When someone saves their money in a savings account or under their mattress, their wealth is being eroded by inflation. Meanwhile, the rich are investing in assets that appreciate faster than inflation. allowing them to continually increase their wealth. This is why Robert Kiyosaki believes cash is trash. Holding on to cash is essentially letting inflation eat away at your wealth, while the rich invest their money in assets that will continue to appreciate in value. Instead of hoarding cash, Kiyosaki encourages people to invest their money into assets that will generate passive income and increase their wealth over time. Overall, the widening wealth gap between the rich and poor is a concerning issue. And while investing may not solve all of society's problems, it can be a way for individuals to improve their financial situation and take steps towards building generational wealth. The government is printing more money, which decreases the value of each individual dollar. Robert Kiyosaki argues that the government's printing of more money has a negative effect on the value of each individual dollar. The more money that is in circulation, the less valuable each individual dollar becomes. This is because there are more dollars chasing the same number of goods and services, leading to inflation. Inflation is the increase in prices of goods and services over time, which is caused by a decrease in the value of the dollar. When the value of the dollar decreases, the cost of goods and services increase, leading to inflation. As inflation continues to rise, the purchasing power of the dollar decreases. This can be detrimental for those who have a large amount of cash saved up. As the value of the dollar decreases, the purchasing power of that cash decreases as well. Therefore, it is not an ideal investment for the long term. Kiyosaki suggests that investing in assets such as stocks, real estate, or gold is a better way to secure long-term wealth. Overall, the government's printing of more money has a direct impact on the value of each individual dollar. With the increasing levels of inflation, cash may not be the best investment option for securing long-term financial stability. It is important to invest in assets that will hold their value over time and generate long-term returns. The stock market is a better investment than cash. While many people may believe that cash is a safe investment, Robert Kiyosaki disagrees. He argues that the stock market is a better investment option. In fact, he suggests that cash is not an investment at all, but rather an asset that loses value over time. The stock market, on the other hand, offers the potential for significant gains. Although there are risks involved, investing in the stock market has historically provided higher returns than cash savings accounts. By investing in the right companies, you can see your wealth grow over time. Additionally, with the rise of index funds and ETFs, it's easier than ever for average investors to get involved in the stock market. You don't need to be a financial expert to start investing in the stock market. Of course, investing in the stock market requires a bit of research and careful consideration. You need to select companies or funds that are well managed, have solid financials, and offer growth potential. It's important to do your due diligence and make informed decisions. What do you think of our video? Let me know in the comment section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.